Hello everyone, welcome on the podcast. In today's episode, we have with us Shubham Sethi sir, also known as Logical Investor. Many of you might already know him as he is pretty active on Twitter and also has his own YouTube channel by the name of Logical Investor. Welcome on the podcast, sir.
Hey, thank you so much for inviting. And before we start, I would like to congratulate you for basically at the age of 14, right? So,
15,
like,
15. I'm 15.
okay, no, 15, yeah. So, I
Yeah.
think what you have achieved is really great. I mean, when I was 15, I wasn't even thinking about anything that you are doing right now. But like starting a podcast, building an app, and obviously school, that is the first thing. And like so many other things that you are doing in the community, basically like publicly coding and like really great. I think thank you so much for inviting. And yeah, it is great to be here.
Thank you. Thanks for coming on the podcast, sir. The first question to you is, in your Twitter bio, you have written that you have become financially independent at the age of 29, 30. How did you do that, sir? And what were you doing prior to that?
So basically, I'll tell you the truth actually. So I basically took a shortcut. So the process generally takes a lot of time, to be honest, it's very hard to do it in your 20s.
Yeah,
So basically, I was a software engineer by profession. I was working at Amazon Web Services (AWS), and I was in. So I started in India. So I
yeah,
was in Hyderabad,
yeah,
and I worked there for 4 years, and then I moved to the US.
yeah,
And I was working for a team called DynamoDB. I'm sure you must have
yeah,
used or you must have heard, right? So
yeah.
I was in the GSI team, which is the basically the indexes team, the global
Hmm.
secondary. So and basically basically a hard code coder. And when I moved there, right, so I was always into investing. Like after my college in 2012, I finished my college, and I was always into investing. I had but wasn't good at investing. So it used to fascinate me, but like I didn't knew how to do it actually. So I would, like in 2012, I would like pick some good, like those were the initial days, right? So I would
Yeah,
just pick like good stocks like an HDFC Bank or like an Asian Paint, like those kinds of stocks,
yeah,
right? um the first annual report I remember that I read in 2012 was Biocon,
yeah.
which was basically talking about biosimilars, which was it basically opened a new domain for me. I was like, oh, like they tell you so many things. Like it is more of like even in general knowledge, right? You won't know,
Yeah.
okay, what is going on in which field, and by reading these reports, you get to know a lot. Uh, and so basically, I had an interest, but I wasn't like pursuing it full time. I was a full time software developer.
Yeah.
In 2017, basically, I was watching a few YouTube videos which were telling, okay, this is how much money you need, okay, like, and then you won't have to basically do your
Work.
job,
Yeah.
and you can basically create passive income sources. And I got fascinated. I said, okay, uh, because there was one more thing actually, even before that, because I was luckily in a company which was a fast growing company. Amazon was like growing very fast.
Yeah.
AWS was growing very fast.
Correct.
So I was getting stock options like every year.
Yeah.
And because I was into stock market, I had interest. I somehow, because I understood, okay, it's growing very fast. So like all my friends used to sell those stocks when they got
Yeah. Like
vested, right?
ESOPs, right?
Yeah, ESOPs. I never sold them. And basically they became a 10 bagger for me.
Uh,
uh, and when I started like working, the stock price was around 270
yeah.
$270. And
Yeah.
when I basically left Amazon, the stock price was around, I think, $3,000.
Wow. Fantastic.
And so that really helped. So basically that is what I'm saying, right? I basically took a shortcut, and I was earning pretty well in US. And then I said, okay, so basically in 2017 I also started like creating my own portfolio. And like earlier also I was doing, but very small amount, nothing like big. around this time I became like really serious.
Yeah.
And that is when I started like learning the intricacies, the actual really value investing, what it is about. And then slowly I made a very big mistake. So I lost almost, I think, 15 lakhs in one stock.
Wow. Oh, yeah.
It was
Which
a
was that stock,
company.
sir?
It was a company called Shimaru.
Oh,
And
yeah.
basically,
The one in music licensing, right?
yeah, that's right. So that the story wasn't like really famous back then.
Yeah.
This was so when I read their annual reports and all. So basically, what the thesis at that time was that this company has rights for so many old movies,
Yeah.
right?
Correct.
It has like thousands of old movies, and I like these movies, right? Basically, all the because internet was like penetrating a lot in India, right? And
Correct.
so basically I was looking at the YouTube, so similar to Saregama, right? Now people are looking at, oh, how many views each song is getting, right? I was
Yeah.
doing those things in 2017 for Shimaru. So I was looking, oh, this movie, they have put it on YouTube, they're getting so many views.
Correct.
And like there are so many, there was a lot of competition in this basically basically the online movie space also, right? There are so many apps
Correct.
like Netflix, Amazon, and so many new apps which were coming, and they were basically getting money for every time someone was viewing the movie. So the business model is very similar. And
Correct.
I was like, oh, they are going to make really good amount of money. There is so much competition. Everyone would need so the largest selection, and they have the rights for old movies. And didn't realize that basically I was not like looking at basically the because the competition was increasing, right? They
Yeah.
didn't had the pricing power, right?
Correct.
And everything on YouTube was free. So basically my thesis was essentially broken. It wasn't playing out as I was expecting.
Yeah.
And then basically the stock was not going where it should go. It was going downhill, and I was not selling, all those biases. So then slowly I think over time, I like in 2018 I lost money, then 2019 I was doing okay. Then this COVID thing happened, and basically the good thing with investing is like uh, you have to make mistakes to learn.
Correct. Correct.
And unless you it's better to make those mistakes with the smaller sum.
Correct.
But that wasn't the case for me. But the thing is, as a result of this, right? Because somehow there was a bias in my mind about these streaming apps when this Saregama and this entire theme was playing out, right?
Yeah.
I didn't even look at it when
Yeah.
everyone was because for some reason I had such a bad experience, right?
Correct. Correct.
Even
Correct.
when like everyone was telling me, oh, look at Saregama, oh, look at this other
Tips.
company tips, right? I was like, no, I don't want to look at their space.
I've already burned my hands in this industry. I don't want to do it again.
Yeah, so it happens. But I think it has been good learning. The biggest thing has been that so far, like in last 2 years, the 15 lakhs that I lost is now a very small sum. And
Hmm.
compared to the overall size
Correct.
that I was able to do. And luckily, like in this last 2 years, the market has been so kind. All the losses got recovered, plus my entire portfolio became almost 2.5 times. So I mean, I would say luck also, and plus learning also. I mean, because I was like this was like a heartbreaking thing, right? You had to know, okay, what is going wrong. And then, oh, I started reading books. I started, oh, One Up on Wall Street, and like so many other books. I basically started following Peter Lynch. I became a hardcore fan of Peter Lynch. And
Yeah.
basically that's where I started realizing, oh, what type of company is it, what I should not do. And over time, basically I
Hmm.
realized, oh, I think finding a company is just 10% of the thing. And I think the philosophy and the biases, those basically is the hardest part, and that makes up like 80-90% of the actual investment, and not
Correct.
just the buying and selling.
Correct. Fantastic. Fantastic. So, and then when did you start your own YouTube channel? So after what happened after you kind of left Amazon? You came back to India?
Yeah, so basically I created an Excel sheet and said, okay, this is the sum that I need.
Yeah.
And okay, I achieved that. And then I said, okay, and I think now I can just go and do whatever I want. I'm
Yeah.
enjoying this. I'll do it full time all my life, because I was doing this for last 3-4 years and I like started really liking it.
Yeah.
And plus then I was slowly learning and I was doing okay. So I came back, and basically soon after that I was looking at a lot of YouTube videos related to stocks, and I realized that the quality of video was not that good in terms of the depth, and what act because I had learned everything the hard way, right? So I was
Correct.
able to relate that, okay, whatever they are saying is not making sense, right?
Correct.
A lot of videos were like very short sighted either. So if you are a technical analyst,
Yeah.
then basically you will find a lot of content. But if you are a
Hmm.
fundamental investor, there were like hardly 2 or 3 channels that I could count on my fingers,
Correct.
which were doing a good job.
Yeah.
That's when I thought, okay, so my intention was never to monetize it, or basically
Huh.
because I didn't have anything to sell.
Yeah.
uh, I didn't plus I was not looking for fame or anything, nothing like that. It was more like, okay, maybe I'll just start doing it, maybe a few people will like it and they will also learn. That's
Yeah.
just like what you are doing, right? You are just building stuff in public. I think I was doing the same thing. I was like, okay, anyways, I'm researching. I'll put it on YouTube, and then maybe the good thing was that uh, basically with this, I was able to connect to such a great community, right?
Correct.
Ultimately, that's the main thing, right?
Correct.
So with Twitter and YouTube, I think irrespective of whatever I mean, no business model, nothing to sell, but I was like able to connect with so many people who were
Yeah.
into this field, and who were doing a much better job than me, and I was able to learn so much from them.
Correct. Fantastic. Fantastic. Great. Now coming to your investing side of things, sir. What is your idea generation process like? How do you find companies that you make videos around?
So, I mean, I look at a lot of companies. Like every day, I try to study one company.
Wow.
And a lot of like just like Peter Lynch says, right? You basically have to. So rejection is more important than selection. So I reject almost like 90-95% of the companies. Because I mean, it used to take more time. Now it has become even simpler, because now like just listening to one con call and just looking at the numbers, you understand, okay, what's the, just try to
Hmm.
get the meat, right? And then
Hmm.
you realize, okay, no, not worth it, okay, just leave it. So
Hmm.
I think that's the good thing. So you try to reject as many things as possible,
Yeah.
irrespective. Like earlier, like my so it's a learning. So earlier, because your universe is so small, right?
Yeah.
Whatever you read, it sounds interesting.
Correct. Correct.
And you try to believe the management.
Correct.
Oh, this is what they are saying, right? But then over time you realize that uh, as your universe of stocks grows, right, you realize that rejection is much more important than selection, because
Correct.
ultimately you only need like 15-20 stocks, right?
Yeah.
And when you need 15-20 stocks, if you only read 30 stocks and choose 15 out of them, your success rate, like, because look at it as a random universe, right?
Correct.
Your success rate will be much smaller. If you look at 100, your chances improve. If you look at like 500, your chances are much better, right? You want to
Correct.
take the best out of those.
Correct.
And that's how I also evolved. And now recently I also added technical analysis, because if a lot of people are looking at technical analysis, right,
Yeah.
I want to like basically my filter should be as stringent as possible.
Correct.
So instead of just focusing on fundamental, why not focus on things which are fundamentally great and which are technically also, like, a lot of traders are also interested in it. So that's how like my basically thinking has slowly evolved. So yeah, you were talking about how do I select. So it's very simple. I follow purely Peter Lynch approach. As soon as I look at a company, I try to categorize it immediately. So if it's a slow growth, fast growth, turnaround, cyclical, or an asset play,
Yeah.
right? And most of the companies in India, I would say more than 50% of the companies in India fall in the slow growing category.
Correct.
So they will like immediately get rejected, which is like fairly simple. Okay, not growing
Yeah.
fast, just leave it. If it is the rest of the things are actually, so then I look at, okay, uh, so like just looking at the balance sheet, right, you realize, okay, or just looking at the P&L, you realize, okay, what is the operating margins, right? Are the operating margins fluctuating too much? Oh, they are fluctuating. Oh, probably it's a cyclical company, right?
Mm,
Okay. Oh, it's a cyclical company. Oh, cyclical company we should always buy when the margins are low and not when the
correct.
margins are high.
Higher.
So okay, oh, they are already at like highest margins.
Correct.
I'm not interested. I'll just leave it,
Um,
right? Then you look at, oh, last 2 3 years growth. Oh, it's growing like 30% every year. Oh, it's a fast growing company, right? Oh, let me see what are the triggers, right?
yeah.
Is it something interesting that's happening? So like today only I was looking at a company called Mitsu Chem Plast.
Mm,
It has
mm,
been growing like 40%, like
yeah.
last 3 years almost, and this year also it has grown 40%.
Wow.
Like in terms of revenue, not in
Yeah.
terms of profit. It doesn't have any pricing power as such, but like in terms of revenue, it has been growing very fast.
Yeah.
So then, okay, this got me intrigued today, and I whole day I was just listening to all the last
On
3 4
calls.
year con calls, all the management interviews. That's what I've been doing all since morning.
Wow.
uh, and yeah, the hardest thing is turnarounds and asset play. So asset play also I just reject. Oh, it's nothing well, I mean, nothing special. If it's just an asset play, it's a holding company or those, I try to stay away, because my previous experience hasn't been good. And turnaround also I like very rarely touch unless I'm very sure that, okay, it's actually turning around, because a lot of turnarounds just fail. So it's pure Peter Lynch kind of style, and uh, that's how I basically focus if I want to pursue it further or just leave it.
Fantastic. I think Charlie Munger also talked about this, right? A concept of inversion. Like instead of focusing on what stock to pick, you should focus on what stock to reject. So
Exactly.
ultimately, the ones which are left out will be the gems, right?
Exactly. I mean, uh, because the number of companies especially like in India, right? There are around 5,000 companies. A
Correct.
lot of companies would be less than 500 CR. So I basically start at 500 CR. I don't go below 500 CR because of, so it's like the corporate. So I look at them only when it is like very fast growing.
Uh-huh.
Otherwise, I try to stay away. So like this Mitsukam, it's a very fast growing company, and that's why even though it's a 300 CR market cap company, I'm interested.
Got it.
Uh, but so you're absolutely right. I think the rejection part. I mean, the more companies that you look at, the more companies you reject, and the better quality companies you are able to get.
Correct. Fantastic. Fantastic, sir. What's the process of valuation, sir? How do you value a particular company?
So valuation, I mean, over time, what I have realized is the simple you keep it, right, the better it is. I mean, with valuation, I mean, what I feel is it's manipulating Excel sheets, right? In like irrespective of whatever matrix you are using, you can arrive for the same asset at a value of 100, and you can also arrive at a value of 200, 300, right?
If you use the right ratios, right? With
Right.
every ratio you use,
So
it's different valuation.
exactly. So what I have seen is like a lot of times when one ratio is not making sense, right? For example, the company is not able to grow, right? The PE ratio is not justifying, right? The PE ratio is still high.
Correct.
So people will try to justify it by, oh no, the price to sale
Undervalued.
is still undervalued, right? So the same company, you can it's a very subjective thing,
Correct.
right? So the same company, you can either say, oh, it's undervalued or overvalued depending on who you talk to, right? But I mean, what I have realized is, even though in my videos I present saying, okay, a fixed value for each stock, that okay, this is the intrinsic value, over time
Yeah.
what I realized is it doesn't work. uh, why it doesn't work? Because ultimately you are not the one who decides the value, right? It is the collective wisdom of the market who decides the value of a company, right?
Correct.
And what you as an investor are trying to decipher is that, okay, what others are willing to pay, essentially, and you want to keep some margin of safety, obviously.
Correct.
uh, and then when you basically are deep into investing, you realize that there are a lot of factors that investors look at while valuing companies. For example, these good companies, right? Like by good I mean to say they have very good brands, like an Asian Paint or a Pidilite, or like a very good brand, right?
Yeah.
These company, or a Britannia, right? if you say, okay, it's growing at 10%, maybe a lot of these big companies are growing at 10-15%, not more than that, and you say, okay, I won't pay more than 20 PE, right?
Hmm.
You need to understand it's never going to happen,
Hmm.
because there are very limited companies which are available in which are like
Correct.
that high quality, right? So then you basically have to keep adjusting yourself, saying, okay, for these good quality companies I might be willing to pay a higher PE, right?
Hmm.
uh, and you were talking about how I value companies. So I'm trying to say that in order to value companies, you need to understand, you need to categorize the whole market into these
Hmm.
small segments, right?
Correct.
So to start with, companies which are cyclical versus non-cyclical, right? If it is a cyclical, then a simple metric would be price to book, right? Okay,
Correct.
price to book. And historically, okay, what is the max? Oh, it's a steel company. What is the maximum price to book it has achieved? And oh, is it in the lower range or in the higher range, right?
Hmm.
If it is a fast growing company, then basically you have two things. You have earning growth, which obviously you are going to get, and you are going to get a P re-rating, right? So
Correct.
then you say, okay, maybe in 3-4 years, oh, it keeps growing at 30-40%, right? Maybe it is available at 100 P, right? But even after 3-4 years, it will still grow at 20%, right? So maybe even after 3 years, people are willing to pay a 50 P or a 40 P,
Correct.
right? And you try to build a simple model. Okay, how much I should be willing to pay for this? So sometimes, I mean, the best investments that I have had are the ones where the P's are like optically very high, or for
Hmm.
some reason, people are not able to find the real value, because maybe the company has done its capex, and the capex is about to come in next 3 months, 6 months,
Uh-huh.
right?
Got it.
And somehow the PE optically looks very high, right?
Hmm.
So those are the best investments. And a lot of like people make the mistake of just using screeners, which I like realize uh, is not the best way,
Hmm.
because with screeners you basically screeners don't know that what are the earnings trigger, right? And
Yeah.
what will happen in next 6 months and 1 year, right?
Correct.
So these
Correct.
screeners will filter out a lot of these companies. So the best way I have figured out, okay, is to just listen to like half an hour or 1 hour of con call, and or just read a value picker thread, and in half an hour last like whatever 50 conversations, and you get a gist, and then you say,
Yeah.
okay, are there triggers available or not, and then you
Correct.
decide. So yeah, that's how I value. So it is basically category by category. So every category has a different metric, every sector has a different metric. So I won't say that, okay, this is the only thing that we should use.
Fantastic. Fantastic, sir. What are the currently the companies or themes that you're researching, sir?
So to be honest, like the last video I made about the publishing sector.
Yeah, that was around 2 months ago. Yes, yeah.
Yeah. And after that, I have not been able to find any company that is like investable for me. And
Oh,
I have read a couple of companies. So the recent one, like the one that I read today, was this one, the Mitsukam.
yeah, Mexican.
And I read a few companies in the auto ancillary sector.
Hmm.
I also read a few companies in I read Repro India. There is one company that I
Hmm.
read last week, and I
Hmm.
read HDFC AMC. So a lot of
Hmm.
companies. I just choose random. I'm not so organized.
Yeah.
Like whatever is interesting, I just start with that. But yeah, I mean, I wouldn't say that uh, there is something like very juicy that I'll just jump onto as of now.
Got it.
But yeah,
Got it.
the goal is to just keep looking and until you find one.
Fantastic. Fantastic. What are the future projects you're working on with Logical Investors, sir? Are you planning to launch a course or something like that?
No. I'm not planning to launch. I'll tell you the truth actually. So I actually started creating a course, but then during the creation, I realized
It's very hard.
no, it's not hard. So I mean, you have a personality, right? So you enjoy doing something,
Yeah.
right? And then when you basically go against your nature,
Yeah.
right, when you basically it conflicts you, it basically haunts you.
Correct.
You feel like, oh, am I doing justice to whatever I thought? So
Hmm.
basically when I left my job, right, so I'll tell you my ideal. my idol is Ashish Kacholia sir,
Correct.
right? So I wanted to have like a 2000 3000 cr portfolio, like I don't know, maybe when I like maybe
Yeah.
when 50 60, I don't know, like, but you aspire to become something, right?
Yeah.
So that's what I aspire to become.
Correct.
And when I started, so by looking at others, I so like one thought came to my mind, okay, the channel is doing okay, why not like just create a course and sell it, right?
Correct.
But then what I realized is the ROI, even if I sell a lot of courses, right, the ROI in terms of my time and whatever like I might
Hmm.
earn wasn't like matching up. So I was
Hmm.
like, okay, why if I focus just on my portfolio, right, the ROI would be
Be
much
much
higher,
higher.
much
Correct.
higher. So then I started it and then I left it because it wasn't making a lot of sense.
Got it.
um, and to be honest, then I don't have any future plans. It's more of a like a knowledge sharing platform.
Yeah.
I don't plan to monetize it. I don't plan to sell anything. um, a lot of people say, why don't you do it? But then yeah, everybody is different. So when I was
Yeah.
spending a lot of time, it was basically every time, right, I was not enjoying it. I was like, oh, just like you're actually going against your goal. You're so actually I was reading a tweet by Ashish Kachwalia sir, like I think 2 or 3 weeks ago,
Huh?
and he was replying to someone and he said that those who know how to do investing don't sell courses.
Wow.
That's what he said. I mean, I don't agree with it.
Yeah.
I'm not of that view. You can obviously do both of them. You can be a good you can be good at stock market and you can also do sell your courses or whatever,
Yeah.
right? But then I was able to immediately relate to it, right? Because he is my mentor, he's my idol. Like I have never talked to him, but
Yeah.
because his path, right, his journey has
Yeah.
been very similar. He left his job, and then even though he started into like financial related companies, and then he started his own firm, but his path was similar.
Correct.
It never crossed because he was good at it, right? And I want to be good at it. My goal is to be really good at it, that my portfolio should speak for it and not my YouTube channel. That's what I aspire to be.
Fantastic. Fantastic, sir. Now my all questions are over. But I had posted a tweet about on Twitter about asking people for questions, and they have sent in around 2 3 questions. I will address them. The first question is from a learner, sir, like Patel Invest. Sir is asking, after financial freedom, how is he managing his expenses, small withdrawals from investment or dividend income?
So I'll tell you the truth actually. So so me and my wife both left our job in 2020, uh, and she went into doing yoga. She started teaching, and
Yeah,
I started doing this.
nice.
She did it for a year, and then she said, I'm not enjoying it, and so she went back to work.
Yeah,
She went back to job basically. And so expenses, to be honest, now it's easier because she's working, so now the expenses are being taken care of.
yeah,
But uh, I mean, irrespective of that, I think so for me, I have like 2 3 sources of income. One is like I have a few properties which are on rent, so I get a rent every month. That is obviously one, and then dividend obviously. So those are the main two incomes. Interest and all, like the fixed deposit, no, I don't touch them. So that is basically, it keeps compounding. So right now, i'm at I'm slowly trying to move my fixed income into stock markets. Right now I'm at 60/40. So 60% is invested in, 40% is in fixed income, and I'm
hmm,
slowly trying to make it around 80/20.
yeah. Fantastic. Another question is from Shaurya Yadav. He's asking how he get to know about Eschand.
About
Eschand,
Eschand.
Eschand. How do you discover it?
So basically, like randomly I was looking at at Navneet Educations, and when I looked at it,
Huh?
then I was telling Saurabh, this he's also on Twitter, right? It's Kumar Saurabh.
Oh, Kumar
So
Saurabh, sir, yeah.
Yeah, so I was on call with him, and he was like, "Oh, why don't you look at Eschand as well?" So he has a few connections. So I don't want to reveal the name because this guy, I mean, he's a big fund manager. He has,
Yeah, no issues.
yeah, he has recommended this stock. I don't want to name him because that will like tell everyone who is recommended. Ideally, I mean, I want to, but I don't. I'll not name him. So he told me that, okay, so and so fund manager, he recommended it recently. Why don't you look at it? It is also interesting.
Hmm.
So that's how I basically looked at it, and then I found Eschand even more interesting than Navneet. And I mean, both of them have done really well since I made videos, and I put a decent chunk in both of them. So I also made good money in both of them.
Fantastic, fantastic. Great then, sir. All the questions are done. Thanks for coming on the podcast. This was like a fantastic learning session for me and the viewers as well.
Yeah, yeah, yeah. And continue the good. So, what are your plans? I mean, just before we end, what are your plans for the YouTube channel, for the tool that you have built?
And same as you also, like nothing is planned. Like I make videos just for fun. Like I really love talking to people and getting as much as knowledge as we can from them, and show that I'm like I like more than the traction that show gets. I like the process of building it. So even if it gets barely any traction, I will continue to build it because I enjoy the process of coding and combination of no code with it.
Okay, okay. But why do you do it? Like, do you have some goal in mind, or you just enjoy and that's why you
Just
do it?
enjoy some like I really love building products or projects.
Okay,
Yeah.
that's really interesting. Awesome.
Fan-
And yeah, congratulations. I saw one of your videos. I couldn't understand it. It was in Marathi, but I saw it got like really good traction. I think there was 1 million plus views in that
yeah,
one.
yeah. Paisa Pani channel hosted that video.
Yeah, yeah,
Yeah,
yeah,
yeah.
yeah.
Great. Fantastic.
Okay.
Thanks for being on the podcast again, sir.
Yeah, 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 definitely. Yeah. Just keep in touch, and if you need any help, anything from my side, yeah, just always open to support you.
Thanks.